This is a quick, easy tool that people have had a lot of success with their clients, just moving them from one place to another. It doesn't get specific, it's very surfacey, but it helps answer a couple of questions that our clients have and actually reinforces some principle. So just a question for you. What is your biggest concern? What do you think your client's biggest concern is most of the time before they finally relent to setting up a meeting with you? Cost. Is that what somebody said? Yeah, it's cost. And what is this going to do to my lifestyle? Right? I like my lifestyle. If I go talk to this advisor, I'm going to have to start doing without. Isn't that the biggest concern, really? So we're going to address that a little bit. So let's just look at this. So let's go out 35 years. Let's put no assets, annual income, $150,000 a year. All right, so this is an interesting thing, right? There's $5,250,000 out there at the end. That's a really tough calculation, isn't it? 35 times 150,000. Does anybody making $150,000 think about their ability to earn a living being worth $5.2 million? So this is a real eye-opener, even at this level, if you go through this and point those things out with your client. This is your biggest and best asset. But Mr. Client, are you going to be satisfied having the same $150,000 a year every year, knowing that inflation is pushing up your electric bill, your food costs, and everything else? No way. I expect at least a cost of living raise, right? 3%? At 3%, what that means is, and I can look over here, can't I? That means $9 million is going to pass through your hands over the next 35 years if you don't get a substantial promotion. This is just a cost of living raise across this time frame, right? What does this say about the value of your ability to work from the standpoint of disability and or death? This becomes something that probably ought to be protected. It's kind of interesting. People want to know, well, I don't really need to get insurance on my life for full value when this is a $9 million asset versus, does anybody ever partially insure their car or their house? How much income are they getting from those things? And yet this is the one that we leave alone? All right, so let's take this a little further. Now, what if you didn't have any expenses, that you could save and invest all of your income? And so this is going to show me your maximum potential. If we just let's say we could earn a net, or actually not net, but just earn 5% out over time. What we see then is that is a $21 million asset we could have in the future. Again, if we had no cost, no taxes, no living expenses, no debt service, which is not the case. So let's put some of that in there. So somebody making $150,000 a year, if we look at total taxes, and by total taxes I mean state income tax, federal income tax, sales tax, hotel tax, breathing tax, cell phone tax. What are we paying in some form of tax? 40%? The late Nelson Nash, before we get to that, actually, what we can see here is that was $3.6 million in cost. But look what it did. It took us from $21 million down to $12.7 million for a difference of $8.5 million. Why did $3.6 million in actual tax paid cost us $8.5 million? Lost opportunity. Isn't that what Kim was talking about earlier? One of the things that's left out most of the time, right? We don't get to pay the tax at the end. It occurs along the way. And the result is, as soon as that money comes out, it quits earning for the rest of that time frame. So the impact of $3.6 million in actual tax paid takes $8.5 million away from our future. So the late Nelson Nash had a statistic that says the average American's debt service is 34.5% of their income. So let's just use that number. And what we see here is another $3 million in cost that takes $7.3 million away from our future. And if we look at lifestyle, and I'm going to use 23.5%. And it could be argued that debt service and lifestyle, there's some pieces there that are connected, obviously, because the debt is probably a result of increased lifestyle. But when we look at that, there's $2.2 million, taking $5 million away from the future, saving 2%, that gets us to a whopping $425,580 at the end. So basically, $21 million of future potential was turned into $425,000. Now what's interesting is, look at what our last year's income is. It's $409,000. If inflation is 3%, only 3%, is $409,000 going to buy any more than $150,000 is today? I would say that it's probably going to buy less because more of the $409,000 is going to be taxed in the higher brackets than is the case at $150,000. So even though it kept up from a growth standpoint with inflation, net, I would say it's probably going to be less. And yet we barely have 1 year saved out there at the end. Now what does the financial industry say we need to do to fix this problem? The industry doesn't talk about saving usually. Higher return, right? Because of risk and reward. It's an automatic. And see, when you say stuff like that, what is it, 7 times when you say it and it becomes fact? Whenever you take on more risk, it automatically means more reward, right? No, let's look at the definition of risk for just a minute. The definition of risk is likelihood of loss. It's not the likelihood I'm going to hit one out of the park. It's the likelihood of loss. So basically what people are being sold, this bill of goods, is that if you take on more likelihood of total loss, you're going to have more money. That doesn't make sense to me. Maybe I'm looking at it the wrong way. But let's say that that were true. Would 10% net of fees annually every year with no down year for 35 years be a pretty good return? What would it take to do that? 14, 15%? Let's put in 10%, see what that does. Wow, that moves us up to 2.5 years of income. That's what people are focusing on. I need to put everything on black or put everything on red because I don't want to put as much money into the deal. So this didn't solve the problem. Even if you could do 10% net of fees every year for 35 years with no down years, it does not solve the problem. So let's go back to something more reasonable. Let's take this back down to 5%. And Mr. Client, when you finally send me data and I can look at what's going on, maybe I can find some areas where you're overpaying tax. What if I could show you how to trim 10% off your tax bill? I don't know if this is possible because you haven't brought me data yet. But let's just say, hypothetically, that that was a possibility. What would that mean? That would mean going from 40 to 36. Not from 40 to 30. That'd be a lot more than 10%. 10% of 40 is 4. Off of 40 is 36. That's a 10% reduction in tax. Look at that. That's $1.2 million. That did more than earning 10% every year. Just in eliminating some cost. What if, now Mr. Client, you can't spend that money that gets found, right? We've got to put that back into your strategy. But what if we use some of that money because it opened up some cash flow and we set up a strategy to take that and optimize your debt, and maybe we can get you out of debt in half the time. We can't do it all overnight, but maybe we could trim that back so that it has the input of just the impact of cutting it in half. Let's just use 18%. There's $4.7 million. So now we're approaching 10 times our last year's income. Now we're really making a difference, and we did it with a reasonable rate of return. I don't know if I can do this, Mr. Client, until we get data, but let's start there. And what you'll notice is we didn't touch lifestyle. What was your client most concerned about? Doing without. What if we can just make what you're doing currently more efficient and pick up the pieces? Let's optimize that. Does that make sense? All right, so if you boil this down, if I could earn 100% rate of return and I don't put any money in it, how much am I going to end up with? Zero, right? So there's got to be a combination between the savings and the rate that's really important. And we've got to have a way to save more. But is that what people really want to do? They want to cut into lifestyle and save more? No. But you know what's interesting is after somebody sees the potential in the future like this, sometimes with many clients it drives them to say, you know what, I bet in addition to what you found here, I bet I could save an additional X amount, because they can see what that long-term impact is and how it improves because of that exponential curve over time. So it can have the impact of having the client actually do some soul searching and some additional savings on top of this.